I might go for these halls. This high. Just a little bit of pre-market analysis. Try to get an understanding of exactly where we're at in this market as far as the price action. All right, so in this little price round, what I'm seeing here for now for intraday bias within this price range between buy side and sell side, we are under the 50% of this run. So seeing that we're under the 50%, we would expect, which is a discount, we would expect price to get back up to to a premium, which is anything above the 50% area. So we want to see some sell side taken out, which we see happen here. See some sell side liquidity swept, and then a break of structure to the upside, which we got right here. Got a body closer above this high. Let's go ahead and mark that. Wish I got some music on. Alright, so we got the break of structure. So price can reach up into this buy side liquidity and possibly this fair value gap right here. We got relatively equal highs up here, so in the order blocks, the price can possibly come all the way up here inside of that price range. What's that gonna mark up? Is it this? Yeah. So that's buy side. And then we got this buy side here. This gap, 5-minute fair value gap with an inverse right behind it. So you can see how price oh damn, wrong button. Big ass fingers. Alright, let's drop down to the 1 minute. See what we got going on down here as far as the first presented fair value gap. Alright, so we don't count one at 9:30. Any fair value gap after 9:30 would be the first presented one. And then I like to have my charts lined up. I have to look it off. Alright, that's not a gap. Price overlap right there. So I seen that this was about to run up simply because, like I said, we were under the 50%. We had sell side liquidity over here, took that out right here. We had this break of structure. We had this recent swing high right here, which got broke right here at 9:29. That was all before the market opened. At 9:30, we got that run up. So in this first 15 minutes, between 9:30 and 9:45, let's go ahead and see what price action do there, what liquidity is grabbed there, or what inefficiency is ran into and respected or disrespected. And based off of that information, that'll help give us a bias as far as what I want to do for the next window of opportunity between 9:45 and 10. So look like we just swept buy side liquidity above 751 candlestick And so that's relative equal highs, and that tapped into a 15-minute fair value gap. So let's see how we react or respond to that. See if we close in there or close above it. And are we seeking this external liquidity above this 15-minute high right here? Or do we stay under it? If we stay under it and create a swing high right here, it can do one or two things. It can retrace back down 50% into this little run up, or if it continues to run all the way down, then we could make a new swing low up under this sell side liquidity and continue making swing lows. So see what I decide to do right here. But we'll have to wait and see what the 15-minute candlestick, how does that print? Do that leave a body above this swing, this recent swing high, or do it just leave a wick up here? The print of the candle is what tell a story. So that's where the patience come in play and waiting to see what that candlestick do, because as that candlestick is printing, it can look like it's going to do this or that, and it can do the complete opposite in a split second. So once it's printed, it's printed. It can't do nothing else after it's printed. That's why we wait for that confirmation and then go from there. All right, so we should have a first presented gap now. We got this little guy right here. So I'm gonna get rid of this just so we can have a clear sight on this first presented fair value gap. It's a small one, but it's there. They usually get respected some way or another. Either they get disrespected or respected. Either way, that's information that could be used. We get a reaction at that gap one way or another. And when there's a volume imbalance, we got to include that as well. All right. Oh, wait, hold on. That's not just a 1 minute gap. That's the 9 a.m. one. Gotta get out on a different label. Look at that, look like on the 5 minute. I think that's just a wick up there. Yeah. So let's see how the 5 minute print. It's a nice little run up. Look at the reaction for this gap right here from Monday. Look at all you got. The order block right here. Price came down, tapped it, and took off. So we got news dropping at 9:45, and we got some dropping at 10. And I believe at 10 is the job report. Let me see. Give me a minute. All right, at 9:45, that's the PMI, the Chicago Business Barometer. And at 10 o'clock, we got jobs opening and consumer confidence. So we should get some nice reaction around there. Got a minute left on this 5 minute candlestick. So if we got a wick on 5 minute, we for sure got a wick on 15 minute. But yeah, just gotta wait and see how that thing print. So 5 minute left a wick up there. Now let's see if the 50% of that wick is respected with, with the body closing under it. Price can run up above it a little bit, but we want a body closer under this if this swing high is to be respected. So let's go ahead and mark that up. And see if we get a body closure up under that. Let's see what it's looking like in 1 minute. Fair value gap right here. But they're respecting 50% so far. We got 2 minutes left, 3 minutes left on the 5 minute candlestick. So hold on, let me tweak this. All right, so we got this high right here. If this ends up being the high of this candlestick, that will make this right here the swing high. So let's mark that just to see if that remains the swing high. Pretty big 5 minute gap right here. That's a nice big run. But that could have easily just been a manipulation move to trick people into thinking that this is the way the market want to go. Which it could still go that way. Who knows? We're waiting to see what it does after 9:45. But these kind of moves entice that FOMO feeling in people, and it just make them want to chase this and get in and buy just off of a feeling, off of an emotion, off of a reaction. Just seeing that move, like, oh, I gotta buy. And okay, do that if you want to. So we need a little more information before we jump in, and that's using logic instead of just reacting off of what you feel the market is going to do. These feelings could be wrong. You're using logic, you're using confluences, you're using multiple things that are aligned, that are pointing in the same direction instead of just one big bullish closed candle. You know what I mean? You need a little bit more information than that to form a bias. Look at the reaction we got on this 9 a.m. fair value gap. Right to 50% of that. So I'm going to wait, see how it reacts or responds to this after 9:45 though. As a matter of fact, we bought right there, so we drop down to the 1 minute. Still respecting this 50%. No bodies have closed above it yet. So I'm still gonna wait and see what is popping. right, so now that we're at 9:45, I want to wait and see is a break of structure in one direction or another with some displacement and a fair value gap. So right now we got this little minor internal buy side liquidity. It just got swept until a body close above it. We don't get no body close above this. This right here is just a little liquidity sweep or liquidity grab or buy stop raid, whatever you want to call it. So if it just leave a wick, I would expect price to turn around and come down, but waiting to see what it does. All right, so we got a body closer above it. I would like for this to remain open. Let that stay. Make this candlestick create a fair value gap. So let's see if we get that or not. Close that right on in. Knock that concept out the window. So wait and have patience. Just wait and see what it does. React or respond to that. One thing I recently came to terms with these damn markets, it's been a little difficult to do. But once I've done it, it's been a lot easier to deal with it. And that is accepting being wrong. There's nothing wrong with being wrong. There's no way to know exactly what the hell these markets are going to do. And it is what it is. I used to struggle with that. I used to force myself to be right by constantly getting in a trade in the direction that I thought the market was going to go. The market was like, all right, that's something for you. And at the end of the day, my profit and loss would show that I was not right. I was wrong. I had to accept it one way or another, whether by force or just by willingly accepting it. And by force, meaning by having blown accounts. Sure. So coming to grips with the fact that, you know what I mean, it's all right being wrong. It allowed me to form a bias, hold on to that just until that bias is invalidated. Once it's invalidated, I'm like, all right, I was wrong on that. Now it's time to go ahead and switch gears and start looking for something that is giving you a setup in the other direction. You know what I mean? When you can't accept being wrong, you're constantly looking for a setup in the direction that the market is not trying to go. And you will get slapped around like that every time. Because when you hold on to a bias like that, you'll constantly find trades that look like it's going in that direction. Constantly. Although you're looking at stuff that's printing, that's showing you the opposite, but you're ignoring that because you want to be right. So putting that aside and just, like I said, accepting the fact of, all right, I misread something or I overlooked something or the market just decided to do this or that. It's all right. It is what it is. I was wrong. I take that on the chin. Let me go ahead and capitalize on me being wrong, get on the right side of the market, get my little kibbles and bits and get on out the way and let the market do what it's going to do. After that, I don't care what it do. Up, down, sideways. I got what I needed to get. Going about my day. All right, so hanging out in this little range. Let's see what on the 1 minute we closed above this 50%, but let's see what the 5 minute did. 5 minute we're still under it. This is still the swing high. So this right here could have just been a liquidity grab above here on the 5 minute. 25 seconds left on this candle. Let's drop back down to the 1 minute and see what we got. So now what I would like to see here is a break of structure up under this, because this right here is a first presented fair value gap. So let me mark that up. We get a break of structure up under here with some displacement and a fair value gap. I would like to participate in that move. And it'll be nice if we create a fair value gap over this first presented fair value gap and then come back up and tap that. So this right here basically be support turned resistance. So if we get something like price come down here, ooh, come back up to it, I would like price to do something like that. Then hop in. It should run down here somewhere. If we do that, we got a whole lot of liquidity down here, relative equal lows, and all this sell side down here. Unless we close above this with a body. That's the only thing that would change that bias. Seeing that we've done all this back and forth in between after 9:45, I might wait for an entry at 10 o'clock. Unless this candlestick right here closes bullish. Let's see what the 5 minute look like. Still got 3 minutes left on that. All right, since we done 3 minutes, let's wait. Nah, I'm gonna go in and look. We about to close above that. Let's go on an hour and see what buy side we got resting up here. All right, we got this little order block. It's the closest order of business, so let's mark that up. Oops. Damn. Fingers, man. Clicking shit. Alright, so that right there be the first order of business that price can get to, in my opinion. What is that, 1 hour? Alright, so I would like to see this left open. I will get in on a buy. So that's what that trade would look like. It'd be real nice if price come down in that area right after 10. That right there would be some clean, beautiful price action. So here's where the patience come in at. Just waiting for the setup. Got 4 minutes left to 10. We don't leave no gaps in here. So this right here is still looking like a good area price when it come back down to. If price get up here before hitting this, and I'll take these orders off. Until then, we're all good. I'm gonna go ahead and look to the left again to make sure there's nothing. We got this little bar side liquidity right here. Mark that. It'd be nice if price get to that and just leave a wick up there. Let that be the swing high. And I have to run back down to this. Tag us in and slide on back up for If not, we can turn around from here. I don't care. Let's go and get back down here. But it is 10 o'clock. If it leaves this open, never mind. Got that one. Mark that up real quick. So that big movement right there is from the news that dropped. I don't pay attention to the news as far as trying to predict or use that to tell me which way the market's going to go or whether it's good news, bad news. None of that. I just look at it and use it to let me know when to expect some volatility. So that way I'm not surprised by a big move in either direction. I rely on price action to give me a bias as far as which way something's going to go, whether it's good news or bad news. Because they use the news to manipulate what people expect out of the markets. They'll have put a whole lot of emphasis on the news being good, and you would expect the market to run up off some good news, but the market could do the exact opposite. It looked like we just swept this down. Some sell side liquidity didn't even tag up in here. So we break this structure right here to the upside and leave a gap. That's gonna be my new entry. We are after 10 o'clock. So at 10 o'clock, there is a new window of opportunity. That could be executed on. So I'm gonna go ahead and get rid of this. And wait and see if we get a gap on this one. If we close above here, and we close above, and hopefully this candlestick right here close bullish or bearish anywhere, but I just wanted to leave something in here open so we can use that to enter on. If not, then I'll wait for the next breaker structure and next gap. Left a little gap open with the breaker structure. So let's see if we can get Get the market to slide down up in there real quick and continue on up. I didn't have my little thing right there. I didn't hit the 50% yet anyways. There we go. Put the stop loss under the body. This one, because there's another gap down here, so price can slide down in that gap also. Let's see. I don't know what that is. Trading View, we're doing some other stuff. So yeah, went on and slid down in this gap too. So I put the stop up under this one. Again, just sit and wait. Just sit and wait and let price do what it's gonna do. Oh shit, that's not lined up, bro. Hold up. Hold on, it wasn't lined up. There we go. Like, that's a wrap. That is a wrap. All right. Well, I was off sides for the day. It is what it is. You live to trade another day. Live to trade a day. I mean, live to trade another day. Go ahead and call it that right there. Where's the YouTube at? All right. It's a wrap. Until next time.